Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about some of the best picks in the mid and small caps section for the next 2 years. This is the Republic Day video. A very happy Republic Day to all of you. And these are my top 5 picks in the mid and small cap domain that have corrected from the top and look very attractive from a 2 years perspective. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these companies, a small request: kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time on short-term, long-term market calls. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. So that's a 20% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, kindly take monthly membership on YouTube, or you can take yearly membership on WhatsApp as well. So, what is the criteria for buying these stocks? These are established brands and strong managements, yet small in nature. The market cap of the company is small or in the mid cap domain. Low debt, no pledging, strong institutional holding, and solid return ratios and numbers of these companies are the main, you can say, pillars for buying these companies. First in this list is Nykaa. I believe Nykaa, after a 60-65% fall from the top, the low it has made is 120. Now looks extremely attractive. Remember that at its IPO and when it went to something like 410, 420, it was trading at, I think, 20 times sales or something of that sort. But right now, even 25 times, 25, 30 times sales. But right now, the stock is currently, the market cap of the company is around 37,000 crores. And it is going to come out with very decent set of numbers. I think 5,200 crores of sales is what we expect in FY23. So 5,200 crores of sales, 37,000 crores of market cap, 7 times sales it is currently trading at FY23 earnings. And when we look at FY24, it becomes even better because I expect around 8,000 crores of sales, so it's less than 5 times sales. That's what it is trading at. It has expanded margins. It has gained market share, it has a moat of itself, yes, but in the fashion domain there could be a replica of such you can say websites that could be made. And so it is in a very competitive environment, but this is a profit making unicorn. So once things get going and they curtail some of their costs, I think numbers could be even better. So at these levels, it looks like a buy from a 2 years perspective. Second in this list is Tata Elxsi, one of the best IT firms. And remember that at one point it was trading at above 11,000 rupees a share, and the stock corrected from there to nearly 6,000, below 6,000 rupees, and currently around 6,300, 6,500. Margins have remained strong, although numbers have dipped in the last 2 quarters, but it has been producing very strong numbers, top line and bottom line, over the last 2-3 years or so. And the sector has gone through a very tough time in 2022, and from September, October 21, things have been correcting, but now we are seeing that there is a strong buying in IT. So I think there will be recovery here. The stock has corrected 40% from the top, so looks attractive now. On dips to 62, 6,300, it can be accumulated. The third in this list is Laurus Lab, one from pharma, and I believe that once IT has its run, probably for 2-3 months, pharma will come back into reckoning from April onward. So I think pharma should perform in the second half of this year. And Laurus Labs has corrected appreciably from around 630, 640 levels, and has halved from those levels. So from highs it has halved, and around 340 looks very attractive. It is trading at 20 times earnings, which is extremely attractive considering that it used to trade at 30-35 times earnings for a long period of time. Yes, earnings have dipped, there's no question about it, but now I think everything is in the price, and a little bit of upside in the numbers could see major upside in the stock price. So one can start buying here. Don't buy big at these levels, but I think one can start buying from 350 onwards all the way to 300. I don't see the stock go below 300 unless numbers really nosedive, which I don't think will happen. I think margins should bottom out now at around 13-14% or so, and should start improving. That's my assessment. So it is coming at very reasonable valuations at around 20 times earnings, and 2 years forward it is coming at 17 times. So I think top investors in HNI are backing the firm and they are buying into it, and this is the time to accumulate and probably take a risk. With Laurus Labs, with the stop loss at 300, one can definitely accumulate. The fourth in this list is Phase 3, a very interesting company of 700 crore market cap in the textile domain. Many of you might know it if you are in the small and mid cap domain. Leading player in the medium textile space, they provide apparels to leading brands globally and has strong margins and profit growth over the last 2-3 years. But the last quarter numbers have not been that great, and so the stock has been range bound for about 2-3 months. But I believe now is the time to probably accumulate strong pedigree, top management, market cap of only 700 crores, and has been in consolidation, can be slowly accumulated between 280-300 levels, and should see major upside in the next couple of years as things improve globally. Remember, it is a global player and it has you can say businesses in Europe and US. So once that recovers over the next couple of years, I think the stock can do appreciably well. And the final stock in this list is Mirza International, a stock that did extremely well in 2022, has gone up 5-6x already from the lows. Management have bought into the stock at 180-200 levels, around between 150 to 220. They have bought big time, and the stock did correct to 230 levels, 225 levels just recently, and has shot up from there. I think one can definitely accumulate this between 240 and 220. Your major stop loss is 180 here, but if you can find the stock on dips to around 220, 230, you can definitely accumulate this. Manufactures leather footwears, and finished leather. Red Tape is a major brand for Mirza International. It had done extremely well in FY22 and is doing well even now. Dividend payout is very decent. A leading global supplier over the last 15 years, have supplying to 30 countries including UK, US, France and Germany. So again, once Europe recovers, which I'm betting on from the second half of this year, I think this is another stock that could perform extremely well. Again, it has corrected from the top around 30% or so. A market cap of 1800 crores is very reasonable, and now is coming at very reasonable valuation. So and now is the time to probably accumulate this rather than buy it at 330, 340. One can accumulate here. Your major stop loss remains 180 here. So this is my Republic Day video. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.